This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on July 26th, 2013. Our time is 8:44 in the morning, Mountain. Radio show runs on your favorite radio stations. The shows are archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com. We also have a podcast through iTunes. Type in World Financial Report on Radio. You can listen to our show anywhere you go on your portable device. Harold does daily market commentary as well. You can find that on his websites and on the podcast. Since we last spoke to you, well, it's been a busy time. Detroit went bankrupt. We'd spoken about that in the past. We thought it would happen. Also, 2 Americans are added to food stamp rolls in the United States for every job that is being created right now. You keep hearing about how great things are. Well, that's not the case at all. And Harold, obviously, you had 3 seminars during the week that were outstanding at rarecoloreddiamonds.com. Last Friday, you were on Bloomberg. That was a smash success, and we have the video of that. We can send it out to those people that did not catch it, but it was great to see you on Bloomberg. You did an outstanding job, and I know a lot of people in the rare-colored diamond industry have been in contact with you and thought you really carried the torch well for the diamond industry on Bloomberg.
Well, thank you very, very much, Randy. It was a great opportunity and very exciting, and did a tremendous amount of business. But the exposure was phenomenal, and it just goes to show the tremendous interest in hard assets, in alternative investments, because, people aren't fooled by what's going on in the world at this particular point, especially with what's coming out of the United States. I'm a Canadian living in the U.S., and basically I've been in the commodity business and in the financial business for over 35 years. So I certainly know when an economy is good or not, and there's just no way in the world that that's the case here in the United States. First of all, in 2008, when the markets plummeted, and you had the problems with Lehman and the derivatives and the banks and the mortgages and everything like that, the game plan was, through the Federal Reserve, to put money back into the system, to get things back on track, to try to bring to a halt all the negative selling and everything that was in the market because of the mortgage situation and the greed and stupidity that happened all that time throughout the United States. So what the game plan was the Federal Reserve to print money called quantitative easing, put it back into the marketplace, and that would stabilize the economy. It would create new jobs. It would get more people back to work. More people would be paying taxes and spending money, and that's what the game plan was. Well, that was in 2008, and it's now 2013, and all of the money that they put into the market has not really accomplished what they wanted it to do. The job situation is not getting better. In actual fact, it's getting worse. The fact is that you've got a third of the population, over 100 million people, are on food stamps. That is not a sign of a good economy, not when people can't afford to put food on the table. And then on top of that, you've got 75% of the U.S. population basically one paycheck away from being out on the streets. So again, how in the world is that a sign that the economy is getting better here in the United States? I would love to see this work out. I think that they certainly tried to do everything that they possibly could to stabilize things, and it seemed that if you did put $85 billion a month into the market, eventually it was going to have the right result. But it's not. And one of the biggest problems, believe it or not, is going to be this Obamacare. And we saw it last month when the job numbers came out. Because basically, if you own a corporation, you are responsible for health insurance for your workers. It is so expensive that it could put a corporation out of business. So their loophole was, the way that they figured it out, was change people to part-time. You had to keep certain people at full-time, obviously, the key, people within the firm. But basically, they were converting many of the full-time workers to part-time. What that does is it reduces the amount of money that they're being paid, number one, and number two, it reduces the need to supply them with health insurance. So there's always a way around it, but the bottom line is that Obamacare could literally destroy the entire unemployment picture type of thing. So again, all of these situations that happen, all of the money that they poured back into the bond and stock markets, that type of thing to get retail sales up and everything, just isn't working. And now it's time to pay the piper. You lay out all this money, and there's got to be a result, because for every action, there's a reaction. And the fact is that when you print as much money as the Federal Reserve has printed, eventually the bills have got to be paid. And as interest rates remain low, it keeps it a bit manageable. But there are signs that interest rates are going to start to rise, and that would be disastrous for the U.S. economy, because it would kill any type of recovery in the real estate market, and it would definitely hurt the stock market. We saw that, last month when Bernanke announced that they were going to possibly start to dwindle down the QE, the quantitative easing, and the market dropped 550 points in 2 days. So they're in a real catch-22 at this point here. If they raise interest rates, it's going to destroy any type of recovery. And on top of that, if they leave interest rates at zero like they're going to, there's just not going to be any growth. And the banks are not doing well, and that's another scenario in its own. So all in all, again, I do believe that everything that we just talked about, everything that I just mentioned, is going to lead to one thing, and it's going to be inflation. And that was the reason that we recommended going into precious metals and hard assets in the first place, is because we believe that the actions of the Federal Reserve, no matter how desperate it's been, is going to result in inflation. And if you read the newsletter this week, there are several reports saying the exact same thing. Because, again, for every action, there's a reaction. And when you are doing what the Federal Reserve is doing, fine, they can keep interest rates at this level for a period of time, but eventually that is going to turn. And we've said for the last couple months that the confusion in the gold and silver markets were very concerning. Obviously, that we saw gold go from $1,920 all the way down to $1,200, and we saw silver go from $50 all the way down to around the $19 level, 18 and change. And basically, we compared that same scenario to the markets back in 1976 and 1977. But what followed 76 and 77 was 79 and 80, and that's when high inflation came. And we all know what happened with that. Interest rates went up to 22%. And gold went basically from $100 all the way up to $850 in a very short period of time. So the bottom line is that this market that we're in right now is not all that different from the market that we saw back in 1976, when a very similar situation happened and the price of gold plummeted in half, and so did silver. But then the market went on a tear and actually went back and made new highs and went up 800%. It's very, very similar to the times that we're looking at right now. So again, this week we've seen gold spend the entire week above the $1,300 level. What I'd like to see is a couple consecutive closes above 13 and a quarter. That's not a big deal, but at least it would show that we're building a bit of a base at about the 13 and a quarter level. The important number for gold is $1,600, and I know that's $300 or $250 away, and that's a long way to get a confirmation, but it's an extremely important confirmation, because if we get a couple closes in gold above 1,600, then we're on our way to 1,900 again, and I definitely believe that we are heading for much higher prices than $2,000 gold. And the reason for that is that the problems that have been building and building and building since 2008 is going to hit one of these days, and it's going to hit very, very soon. And when that does happen, these markets are going to explode. So again, if you own physical gold and silver, don't be frustrated with it. These markets do that from time to time. Look at the volatility that's in the oil markets and other markets at this point. However, the trend is always your friend, and the trend for metals, even though it's gotten beaten up, in my opinion and many others, is extremely higher than where it is right now. So what we need to see is a couple closes above 13 and a quarter for gold, and that's not a real big deal. For silver, the important number short term is 26 to 26.50. We got a couple closes above 26.50, which is a nice increase from where we are right now, about a 30% increase. The fact is that silver can take off. Silver is a metal that can take off faster than any other market that you've seen. So again, I'm still very optimistic. I'm very obviously concerned about the state of the world economy, because again, the whole picture is frightening. I do a lot of business in Europe in the diamond business, and the amount of diamonds that are being purchased in Europe at this point is unprecedented. In actual fact, the demand is so high for deep, flawless, white, perfect diamonds and argyle pinks and those type of things because people are petrified about what's happening in Europe, and they see the same thing happening in the United States, and now they see Japan following the exact same thing, where the Japanese market is all over the place. So as we're taping the show today, gold is down $750, a typical Friday for gold. But this week has also actually been a very good week for gold. So we're trading right now at $1327.60. Again, I'd like to see two closes above 13.25 short term to show that we're going a little bit higher and building a base. Silver's down 23 cents, but we spend most of the week above the $20 level. Again, at this particular point, 23.50 is an important number. And so is 26.50. 26.50 would be very advantageous for us. Platinum's down $20 at $14.33. Palladium's down $13 at $7.30. And then you've got the Dow down 92 points right now at 15,463. The Nasdaq is down 11 points at 35.93. The big thing this week, the TSX just went negative just by a point. It's at 12,668. You're really not getting an awful lot of movement in those markets at this point, one day up, the next day down. The market that you want to watch right now is the U.S. dollar. It's been down heavily this week. It was down heavily on Thursday. It was down about a half a penny for the day. We're down another 18 points at 81.61. There's very heavy support in the U.S. dollar at 80 cents. If that 80-cent level is broken, which I definitely believe it will be eventually, we're going to see a free fall in the U.S. dollar. The lowest point we saw in the U.S. dollar was at 72.5 cents, and that's when gold hit 19.20 and silver hit $50. So obviously the key to gold and silver going higher is the weakness of the U.S. dollar, and as long as the Federal Reserve continues to print and print and print more money, only one thing is going to happen. The dollar is going to continue to fall. And as the dollar continues to fall, gold and silver prices will go substantially higher. So 80 cents is very heavy support in the U.S. dollar. We've seen a big down week in the dollar. And again, as that dollar gets weaker and weaker, you're going to see other foreign currencies get stronger, and gold and silver will really take off. And then you've had the Nikkei down 432 points today at 14,129. What they're trying to do in Japan is similar to what they're doing here in the United States, which I'm scratching my head. Why in the world do they want to follow the unsuccessful attempts that the U.S. is doing at this point? So, again, it only reaffirms in my mind that desperate times bring on desperate measures. The crude oil market, they did some profit taking this week. It's down about $1, but we're still at 104.31. We did get to a high of 108 in crude oil. I'm still very bullish on crude, and I do believe crude will get back up to 150 to 170. So at this point, Randy, that's what happened in the markets this week. And again, basically everything that is a lot of the stories in the newsletter this week, which, by the way, is an amazing newsletter. You did a great job. A lot of it is on what's going to happen with inflation as a result of all that the Federal Reserve is doing, and I buy into that 100%. Again, I don't see any way in the world that inflation is not going to be an issue going forward, and the best way to take advantage of that is owning physical gold, silver, diamonds. Those type of assets will respond the highest to what's upcoming in the inflationary markets.
In our newsletter this week, and you can get it from Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold and silver, platinum, palladium, 1-866-623-2002, the website wwpmc.com. And in our newsletter, in the silver section, Tom Fitzpatrick, he's an analyst with Citi. He says, we will just have to see if silver can solidly move through the 2050 to 2150 area. If silver does eclipse that zone, then we will see a decent acceleration in the price of silver to $27.50, which is about 35% higher than we are right now. So if you're interested in possibly making 35% on your money, speak with Worldwide Precious Metals about the silver market. John Embry also saying, with the silver market update, if gold finally starts to get out and run, and we finally see silver punching through 20 convincingly, silver will be ready to begin a massive leg higher. The fundamentals for silver are beyond spectacular. When this whole bull market resumes with a vengeance, silver is going to outperform gold. Gold will do extremely well on its own, but gains in silver will be historic. Now is the time to look at having some hard assets in your portfolio. Gold, silver, platinum, palladium. Educate yourself as to the seasonality. We are in the sweet spot for seasonality for gold and silver. Let Worldwide send you the charts on seasonality, explain to you why now is the optimum time to be in this market for seasonal reasons. 1-866-623-2002, wwpmc.com is the website. As well, they spoke with us this week, and there was an alert from PMI. And this alert was about backwardization. And we've spoken about GOFO and backwardization. In our newsletter this week, we have a chart from Jim Sinclair. It's a GOFO chart, and it's the go forward rates. The difference between cash gold and future gold. Backwardization equals negative GOFO. Negative GOFO equals when the nearest future gold price exceeds the spot future gold price. And if you see this chart, you can see the last time this happened was back, and this actually is around 2008. When this happened, there was a huge move up. You can see that on the chart. Get that chart from Worldwide Precious Metals as well. We have some charts from Citi analyst Tom Fitzpatrick, and he goes on to point out, and very well, I might add, in this chart, gold, the correction we're having right now is very similar to 1975 to 1976. One of the other charts we have is from Zero Hedge, and they point out that JP Morgan eligible gold has plummeted by 66% in one day to just over 1 ton. Total fresh gold at an all-time low. And you can take a look at those charts as well in our newsletter. We also have some charts from Eric Pomboy, and he goes on to say that right now, based on commercial traders and their positions, very advantageous to take advantage of what's happening in the market right now, seasonality-wise, also because of backwardization and GOFO. I know it's a little confusing for some people, but that's why Worldwide is there. They're the experts in this very specialized field. They will basically explain it to you in simplified terms as to why now is the time to add to your position or start your own precious metals investment account today. 1-866-623-2002, wwpmc.com. In our newsletter, William Kay says, and he's an expert in this field for 40 years, the gold system is based on trust, and trust is breaking down. What this means is people are paying premiums for physical gold today versus taking a paper promise from the COMEX or a bullion bank for delivery in a week, 2 weeks, or a month in the future. So the fact that people will pay a premium for delivery of gold today tells you everything you need to know. Negative lease rates simply mean the strains are so great in the system as it relates to the delivery of physical bullion that banks will pay a premium. This is a bizarre situation. What is suggesting here is that the system is breaking down. It suggests that entities which are known, sovereigns and central banks that want to accumulate gold, they don't trust the system anymore. They don't trust the paper contracts. So the paper contracts for future delivery trade at a discount to current delivery. What the market is saying is, we want gold today. We don't want your paper. We don't want to hear from you, JP Morgan, and we don't trust the COMEX. We want gold, and we want it delivered physically today. And if you can't do that, then basically what they're saying, we don't want to do business with you. And this is why gold for spot delivery today trades at a premium to the paper for future delivery in a week, a month, 2 months, and 3 months. The gold delivery system is based on trust, and trust is breaking down. What that means is the setup for gold is as good, if not better, than the NASDAQ tech stocks in the early 90s. Speak with Worldwide Precious Metals as to why now is the optimum time to be involved in gold, silver, platinum, palladium. Telephone number 1-866-623-2002, the website wwpmc.com. And Harold, we have about 3 minutes left in our segment, but you take a look at seasonality. Some people don't believe there's an issue with, we should mention for the other side, there are people that don't believe that this GOFO and backwardization is an issue, but a lot of people, including Jim Sinclair and others, get that alert from PMI, from Worldwide. They really believe, based on seasonality and what's happening with GOFO and backwardization, this is a major setup in the gold and silver market to propel it very high from now until the end of the year.
Well, again, it's possible. It's happened before. Again, don't forget, gold went up 800% in 2008. So, again, what's happening in the markets right now is not normal. There's no way that the Commodity Futures Trading Commission, the federal government that polices, the futures markets, can be sitting back there and saying that this is normal for gold and silver to move the way it has. It's something that is, again, quite infuriating when you see the way the market has traded. But again, this has happened before, and it ended up with the correct result. So, again, I believe in it. I've traded futures for 35 years, and I've seen this happen many times.
Connect with Worldwide Precious Metals, 1-866-623-2002, 1-866-623-2002. The website is www.pmc.com. Some of the quick hits we have in our newsletter. You can get our newsletter from Worldwide. Gerald Salente says, look at what happened when Bernanke announced this whole tapering back in May. By the middle of June, the markets were tanking on fear they would stop printing money. They have to keep printing the money in order to keep the Ponzi scheme going. When the money stops pumping, the economy gets off life support and it begins to die. That's why I'm still a believer in gold, and I'm holding on to it for the long term. What's the upside of gold? He potentially sees in the short term $2,000. It's interesting. I was reading an article this week. Rob McEwen, who's a well-known mining executive, he believes we could actually see $5,000 gold. He's still a strong believer in $5,000 gold. Jim Sinclair is still a strong believer, and he correctly predicted $1,650. He is still a strong believer in $3,500 gold. So that's something to keep in mind as you're involved in these hard asset markets. And we'd always take a look at the gold to silver ratio, and it's important to take a look at gold to silver. Right now it's trading at about 66 to 1. And if we did get to a scenario of $2,000 gold, the 60 to 1 ratio would put silver at 33.33. So from where we are today at around $20 to 33.33, and that's a ratio of roughly 60 to 1. If we got to 50 to 1, $2,000 gold, that would be $40, 40 to 1, $50, 30 to 1, 66, 67. So you can see that there are some major moves to be made in these markets as the gold and silver ratio improves and as gold and silver continue to go up. Now's the time to start your own precious metals investment account. It's a liquid asset. You can buy and sell with a phone call, secure storage, insured to the full value of your investment, 24/7 online access, and you'll have the use of an expert from Worldwide Precious Metals. Connect with them, www.pmc.com, 1-866-623-2002. It was a very exciting week for diamonds because Harold was on Bloomberg and spoke about diamonds and met my crush, Deirdre Bolton. I'm very jealous. And we'll talk about it as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on July 26th, 2013. Our time is 9:09 Mountain. Radio show runs on your favorite radio stations. Shows archived on Harold's websites. You can stream them anytime you want. HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. You can listen to our radio show on your portable device. Type in World Financial Report on Radio. Harold does daily market commentary on his websites. You can find it on the podcast site as well. Connect with Worldwide Precious Metals. Speak to them, as we mentioned before, about backwardization and GOFO, and find out, and even talk to them about seasonality as to why now is the optimum time to be adding to a position in precious metals or starting your own precious metals investment account. www.pmc.com is the website. Telephone number 1-866-623-2002. Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. Telephone number 1-800-432-1022. You can connect with Harold. His auction site is hsfineauctions.com. Next auction, October 21st, 8 Eastern, 6 Mountain Time. Put that on the calendar. And Harold had 3 seminars that were hugely participated in and successful on rarecoloreddiamonds.com this week. And last Friday, of course, Harold was on Bloomberg, and that was a massive, massive success. Our featured diamond this week from rarecoloreddiamonds.com is a 3.05 carat radiant cut fancy intense yellow. And Harold had a stunning yellow diamond when he was on Bloomberg. It was absolutely gorgeous, just a beautiful, beautiful yellow diamond. And they said that it was approximately worth $800,000. Now, Harold, obviously it was exciting to have you interviewed by Deirdre Bolton. Why Diamonds, Colored Diamonds have a great track record when it comes to investing. For those that did not see you being interviewed, we have the video. We can send it out to you. It's in the newsletter. We can send it out to everyone who would like to see it. It was a outstanding interview. And as I said earlier, everyone thought it was just very, very positive to see you on there, Harold, and it turned out just absolutely spectacularly.
It was exciting. Excuse me. There's no doubt about that was exciting. And again, it just shows the interest all around the world for alternative investments like diamonds. So that's one of the biggest arenas in the world, one of the biggest stages to be able to present. And again, the people at Bloomberg did approach my PR firm, and we did set up this phenomenal interview. And, you know, when you look at a station the size of Bloomberg, you know, to be able to present for 2 to 3 minutes is normal. Ours was almost 7 minutes, so they were very interested in what we were talking about. I had brought some beautiful diamonds. That yellow that everybody's talking about is my wife's diamond. That's a 14-carat internally flawless in a Harry Winston setting. And you got to admit, of all the diamonds that were there, and there's some magnificent diamonds, that was the diamond that stood out the most. And again, that diamond has doubled in the last 3 years. The other thing that I brought that went over tremendously was Elizabeth Taylor's 95-carat diamond necklace and 22-carat matching diamond earrings. And the host of the show, Deirdre Bolton, requested that she could possibly wear the necklace, which we allowed her to do, and she was just in La La Land. It was, I mean, how often does any woman ever get a chance to slip on Elizabeth Taylor's 95-carat diamond necklace? Just so you know, everybody saw that necklace, and the response was so overwhelming. I must have received 30 emails just asking about that magnificent necklace, and it was actually purchased right after the show. Also on the show, we had not only my wife Harriet's 14-carat magnificent yellow flawless, but we had a 4-carat pink worth $4 million. We had a magnificent 5-carat D flawless perfect diamond, which was one of the best investment diamonds you can get, and that sells in about the $1.5 million range. And then we also had a magnificent green diamond worth 7 figures also. So it was a phenomenal show. One of the most exciting things, Randy, which is what you mentioned, is that people in the diamond industry got in touch with us through emails and phone calls and said that we represented the diamond industry extremely well, and they were very proud of what we built. So, you know, the fact is that when I looked at the diamond business many, many years ago, I knew from experience that diamonds go up in value. The only problem was, how in the world do you resell them? There was never a true secondary market, a legitimate market where people could sell smaller diamonds. Sure, you've got Christie's and Sotheby's that sell the, you know, $5, $10, $20 million diamonds, but how about those of us that own diamonds that are in the $20, $50, $100,000 range? There has never been a market for that, and that's what I'm most proud of that my company has brought to the diamond industry, is the opportunity to trade in a secondary market. Now, we've owned this business now for 3 years. It's our second year of auctions, and they've become extremely successful. However, you know, at this particular point, clients are accumulating diamonds. Nobody is really selling diamonds at this point. So the auctions that we've had up until now, which have been extremely successful, have really been me selling my own diamonds that I've accumulated over the last 10 years. The most important thing about the auction business and about our business is to develop this market over the next 5 to 10 years. So when our clients are ready to sell, that we have the high net worth clientele and everything in place for when our clients want to start to sell. But the next 5 to 10 years is when most of the money is going to be made in the rare diamond market. And the reason I say that is that the Argyle mine in Western Australia, is not going to be here within 10 years. And there goes 95% of the world's pink diamonds. So the opportunity to own Argyle pink diamonds is now. If you're one of the fortunate ones that can get into this market, it starts at about $35,000 a diamond. So obviously, it's not for everybody. But we anticipate that those diamonds, because the mine is going to close and they produce 95% of the world's pinks, we believe that the price of pink diamonds is going to continue to skyrocket. They go up right now by about 15 to 20% a year, except for the vivid pinks, which is the strongest color. They've been going up by about 50% a year. They've been doubling every 2 years in value. So if you look at where your investments are right now, if you look at putting your money in the bank for safety, first of all, we know that the banks are not safe. Number two, they're paying 1 or 2% return. How in the world do you ever get ahead with a 1 or 2% return on your money? Along with the fact that you've got to be nervous keeping anything over $125,000 in a Canadian bank, because if the bank goes under, the fact is that you're going to lose all of your money except the insurance of $125,000. So be very careful about that. But again, getting 1 or 2% on your money has forced people back into the stock market. And the stock market is very risky, and like in 1999 and 2008, the markets plummeted so substantially that it took away most people's money, and it took, basically 4, 5, 6 years just to get back to break even. So you really want to look at how you're going to invest your money. And again, diversification is extremely important. I'm not saying, not to keep money in the bank. You got to pay your bills, but there's no money to be made that way. Going back into the stock market, the fact is that it's so risky at this point here that we could wake up at almost any time and find the market in a free fall like we did in 2008. Nothing has really changed from that particular point. Put some money into a diamond. Give yourself an opportunity to make some money. Capital preservation is extremely important. Keeping our money at this point is vital, but the opportunity to make some money is also extremely important. And if you could make 15% on your assets a year, how in the world is that not attractive in light of what the financial situations are and the opportunities that are out there at this particular point? Diamonds that will give you a 15% return at this particular point. You've got D flawless white diamonds. D meaning colorless, the best color you can get in a white diamond, flawless being the highest clarity grade. Our diamonds are considered triple excellence, meaning excellent in cut, polish, and symmetry. They represent 0.001% of the market, and these diamonds go up by 15% a year, every year except when there's a problem in the stock markets. In 2008, these D flawless whites were negative correlated to the stock market, meaning when the Dow Jones dropped 50%, these diamonds went up 50%. This was of extreme interest to the people on Bloomberg. Again, you're looking at a 15% return on an asset that never falls in value. So to put, $100,000 into a D flawless diamond, let's face it, a lot of people don't have that kind of money. But if you do, it's one of the best assets you could possibly own. It gives you protection against a declining stock market, gives you a 15% return, and it's one of the most important diamonds in the world. They're 10 times as expensive as a normal white diamond. That should give you indication as to how phenomenal of an asset this is. And then you've got the Argyle pinks. They go up by 15 to 20% a year, except for the Vivids, which is the highest color, and those are going up by about 50% a year at this particular point. When I've said in the past that people that have bought vivid pink diamonds, Argyle diamonds, 5 years ago for about $50,000 at that point, those diamonds are now up to $200 to $250. That's how much these diamonds are going up, and we're still 6 years away from the mine closing down. So if you have not put away money for retirement, if you're concerned about your retirement, or at least having a fighting chance to make some money in a market, look at the Argyle pink diamonds. They start at about $30,000, $35,000. They go up into the 7 figures. We have the largest supply of Argyle pink diamonds in the world. I've invested very heavily in those markets because I believe that those are amongst the best investments that you could possibly make. So you want to own the Argyle pinks, because in 10 years from now, when the mine is closed and there's no more pink diamonds, a diamond that you may have bought for $50,000 could be a $300,000, $400,000, $500,000 return to you, and that's the potential potential of the pink diamond market. And then you've got the yellow flawless market. The yellow flawless market, again, is a market that goes up by about 15% a year, unless you get into the bigger diamonds, like the ones over 3 and 5 carats, like the featured diamond this week. The fact is that only one diamond in 15 million, only one diamond in 15 million turns out to be a 2-carat diamond or larger, and in most cases, they're not flawless. So all we offer in yellows is the flawless diamonds. If you have not seen the interview on Bloomberg, we can send you the link for it. It's in the newsletter, isn't it, Randy?
Yes, it is. Yep, we have it in the newsletter.
Okay, so you can look at the interview. It's about 7 minutes, and when you see even Liz Taylor's 95-carat necklace, which was the most beautiful thing in the world, and her earrings, and the pink for $4 million, and the green for millions, and the deep flawless, but the diamond that stood out tremendously was that 14-carat flawless yellow. And again, that diamond has doubled in the last 3 years. So this is where some of your money should go. If you have not put away anything for retirement and you're concerned about that, you can get involved in yellow flawless diamonds starting at about $15,000 to $20,000. And those diamonds, a $20,000 diamond today, in 10 years from now, could be worth close to $80,000. I highly doubt that if you put $20,000 into the stock market, in 10 years you'll see the same return. So again, diversification is extremely important. You definitely want to get into the diamond market. Deep flawlesses returning 15% a year and negative correlated to stocks. You can protect part of your stock position by owning a deep flawless. And again, they're expensive, but they're amongst the best investment diamonds in the world. The Argyle pinks, again, no-brainer. The mine that produces 95% of them is about to close down. There will not be any more of these diamonds within the next 10 years. And if you happen to be one of the fortunate few to own these magnificent diamonds, I believe you're going to make a tremendous return on your investment. And if you can afford a vivid pink Argyle that start at about $100,000 and go up from there, those diamonds right now are doubling every 2 years. They're going up tremendously because the color is as close to red as possible. And then again, the yellows are just phenomenal. Just so you know, and I've mentioned it many, many times on the show, I've got 3 young grandchildren, and I put away diamonds for their future, almost every single year. So if you've got grandkids out there and you want to help out and you want to give them a good start, or your kids, these are phenomenal assets because they don't decline in value, they do increase substantially, and they give you the opportunity to hit a home run in the investment market, and you're not trading markets like the risky stock markets and other markets like that. So give a look at our diamonds. Our diamonds, if you go to rarecoloreddiamonds.com, first of all, look at our loose diamond section. Go to the yellows, go to the pinks, go to the deep flawlesses, look at the videos on these diamonds and see how magnificent they are. And then understand also that we are the only company that thought enough about our clients to create a secondary market to resell them. Since we started in the diamond market, about 10 years ago, there's been several smaller companies that have popped up from time to time, a bunch, in Canada and Toronto that listen to our radio shows, and they're starting to sell diamonds. In most cases, a lot of the diamonds that they sell are not investment quality, so be very, very careful. That's why we want you to attend our live online seminars from the comfort of your own home so you can understand what diamonds are worth more than others so you don't get confused. And the other thing, which again is most important, is how do you resell that diamond? And again, you certainly want to deal with a company that's going to be able to liquidate your diamonds down the road when the time is right to do so. So again, with the state of the world economy, it's very difficult to make money in real estate or stocks or anything at this point. A diamond that returns 15%, that's why they wanted us on Bloomberg, and that's why they invited me back in October just before our next auction. So again, Randy, it was a very, very fun weekend. We had a great time in New York. I brought my wife with, and we had a great time, saw a couple great shows, and we just had a great time in New York. But we are going back on Bloomberg again, and it's going to be in October just before the next auction.
RareColoredDiamonds.com is the website. It's the worldwide leader for rare colored diamonds. And we should say to anyone who's listened to our radio show, if you would like to interview Harold, all you need to do is connect with him. If you're in the media or anyone that would like to interview him or connect with him, go to RareColoredDiamonds.com, telephone number 1-800-432-1022, 1-800-432-1022. The auction site is hsfineauctions.com. Our featured diamond this week is a 3.05 carat radiant cut fancy intense yellow. Stunning diamond. In the newsletter this week, get it from Harold. We do have the interview on Bloomberg with Harold. And one thing I do want to mention, we have a picture, and it's a picture of, well, I took a screenshot of when they put the Liz Taylor necklace around Deirdre Bolton's neck. I'll tell you, that woman, she's probably the happiest, the look on her face, euphoric, to say the least. But there's also a picture of Harold and Deirdre together that Bloomberg took. I took off our producer's Twitter feed, and she has the necklace on. You'll see those pictures in our newsletter. But Harold, that one picture of you two together, you and Deirdre, she has the biggest smile on. But even the look on her face when your associate was putting the diamond necklace around her neck, if you wanted to win a lady's heart, that is the way to do it, without a doubt.
You better believe it. And guys out there, remember the same thing. The look on her face would be the look on your wife's face when you put a beautiful colored diamond ring, necklace, or earrings on your wife. So, the other beautiful thing about investing in these magnificent diamonds is that you can wear them. You can enjoy them for the life of the time that that you own the diamond, and then give it back to me to sell, and we'll sell it for you on our auction site. So it's really a win-win situation every way to be able to wear. Some of the most exquisite museum quality pieces is just something, that's what life is. If we can do something for our spouse and make them happy, let's face it, we'd certainly want to do that. So take a look at the newsletter this week. Obviously, look at the Bloomberg interview and see what we did up in New York, and I think you'll be as excited as we were.
5 compelling reasons to invest in diamonds: privacy, portability, estate planning, price stability, long-term growth. And as Harold was touching on, unlike a stock certificate, bond, or T-bill, this is an investment you can hold in your hand. Colored diamonds can be mounted, displayed, appreciated on fingers, wrists, ears, necks of a loved one, obviously. They can be mounted, unmounted. They can obviously be sold at auction. It is just an outstanding asset to consider for your portfolio. And I'm sure that if you handed your significant other a stock certificate, bond, or T-bill, they probably would be a little happy. But if you say the look on Deirdre Bolton's face when they're putting that Liz Taylor diamond necklace around her, that's a whole different level of happy, Harold. And even when we had the seminar here in Edmonton, there was that young couple, and the guy had the diamond ring made up for his significant other. I believe it was his wife. And everyone crowded around and looked at her diamond ring. And the look on her face, she just got enormous pleasure out of that and pride that she was wearing. And this was a stunning diamond ring that Harold had created for her. And that's something you just cannot put a price tag on when you are at the end of your life. Sure, you may have a bond or stock certificate, but that feeling that you've gotten by having that jewelry on and people oohing and awing, that takes things to a whole different level, Harold.
You better believe it, Randy. And again, it was just a real fun time up in New York, and I just hope that the clients can experience how wonderful this is and how great of an investment it is down the road. And again, something that will bring a lot of pleasure. When you look at Liz Taylor's jewelry going for auction, I have auction results, and if you want to see them, just contact me and I'll send them. But even pieces that she's owned that went to auction at Christie's a couple years ago, and even earrings that were in the $40,000 to $60,000 range sold for multiples of 10 times that amount. She had some earrings that they estimated would sell for $40,000 to $60,000, and they sold for $800,000. So the buyer of Elizabeth Taylor's necklace and earrings was very, very sharp. He picked up on that right away and ended up, investing in something that's probably going to return 5 to 10 times what he paid for that. So it was a very brilliant move on the client's part. And again, opportunity, when it knocks, you've got to be able to be there to take advantage of it. And that's what we're hoping you're going to do with the diamond market, because again, there's no other investment out there that's safer and more profitable. And again, when you talk about preservation of wealth, there's nothing stronger than owning the type of diamonds that we've just recommended.
RareColoredDiamonds.com is the website. Connect with Harold at 1-800-432-1022. Speak with him personally and privately about the diamond market. We will send that interview with Bloomberg and Deirdre Bolton out to you. You can watch it. It's outstanding. And I think I've watched it about 10 times. It's just one of those interviews you just love to see over and over again. And check out this week's featured diamond, a 3.05 carat radiant cut, fancy, intense yellow. In our newsletter, we have pictures of Harold and Deirdre together. We also have 2 reports. Diamonds aren't just a girl's best friend. In fact, they go on to say in this article that they're an investor's best friend. And we have a story on the world's richest diamond owners. You can check that out and get our newsletter from Harold at RareColoredDiamonds.com or 1-800-432-1022. The company Harold recommends you use when it comes to investing in precious metals is Worldwide Precious Metals. Their website is wwpmc.com. The telephone number, 1-866-623-2002. 1-866-623-2002. The website, wwpmc.com. You can get our free weekly newsletter from Worldwide Precious Metals as well. In our newsletter this week, Egon von Greyer says, right now, the world is facing massive debts, bankrupt governments, and a bankrupt banking system. The banking system is only surviving temporarily because of massive quantitative easing and zero interest rates. So the Fed can't see a crisis when it's staring them in the face. Central planners just don't understand the liabilities have created by letting the unregulated derivatives market grow to over $1 quadrillion. Greenspan argued that derivatives were a cushion against instability in global markets, but derivatives are not a stabilizer. Derivatives are financial nuclear bombs and virtually guarantee a detonation at some point. The only way to attempt to offset the coming derivative disaster will be for governments to print the same amount of money as the counterparties' failures. I wonder what printing $200 trillion will do for the U.S. dollar and to the gold price. We might see that one day, but it makes no difference what central planners say. Government mismanagement of the economy has put the world in a position that it cannot afford to get out of without extremely serious consequences. So investors need to avoid all of the noise and protect themselves from the coming collapse of the financial system. So all of the ingredients are now in place for enormous chaos in the global financial system, and it's going to start, and he believes, this autumn. This is another fundamental reason why gold and silver have bottomed, and we now begin a violent move to the upside. As he wrote with King World News, gold will trade above $10,000 and silver will eclipse 500 as the current global financial system collapses and the real chaos begins. Get that newsletter from Worldwide. Get that newsletter from, obviously, RareColoredDiamonds.com. Get our newsletter, read that article. But, Harold, we have approximately 30 seconds left. And, even if he's half right, we could see gold go up to 2,500, 3,000, maybe 5,000. Silver going up to 50, 100, maybe 150. And you need that insurance policy in your portfolio.
You bet. Don't forget, when gold went up 800% after the heavy fall in 76, gold went from 100 to 800. We're now at $1,300 gold. If we see a similar type of thing, you could easily see $5,000 or $6,000 gold. That's not out of the question in any way, shape, or form. So again, time is going to tell. It's building a base at this point here, and I'm still very confident that moving forward, the gold and silver is still one of the best investments you can make.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful long weekend and a very profitable day.
And yes, it was great to see Harold on Bloomberg. It was a little surreal. I have that channel on all the time, and there he was, the guy I know. And you can see it as well. Get the interview from RareColoredDiamonds.com. Connect with Harold, 1-800-432-1022. On the precious metal side, the company Harold recommends you use, a great Canadian company in business for over 10 years, Worldwide Precious Metals, wwpmc.com, telephone number 1-866-623-2002. That's it, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.